why is investing in clean tech going to be different this time around? Is my shorthand for the topic for this conversation. And I'm really pleased to welcome my panellists, and I will ask them to make a brief introduction to themselves in just a minute. But I'll start by telling you who I am, and hopefully you'll find that marginally interesting. I'm Caroline Gorski. I am responsible for the advanced data analytics and artificial intelligence capability at Rolls-Royce. And when I say Rolls-Royce, I don't mean the car company, because we sold the car company to BMW a rather long time ago. I mean the power generating company. So the people who make the engines that fly aircraft when aircraft are flying, the people who make the kinds of power generating units that drive our nuclear submarines, that power nuclear power stations, that drive trains, that make it possible to have backup power generation in hospitals and data centres. Oh, thank you.
You don't have to press.
Okay, so that's me, that's what I do. My team is responsible for thinking about and looking at and deploying new data-driven technologies across Rolls-Royce's estate and also for other industrial clients who we work with. We are also responsible for scouting for investments in digital and data capabilities in the marketplace, particularly around, obviously, artificial intelligence. And so that's my background and why I'm here. You may also have seen announced in the press just this week the partnership between Rolls-Royce and the Qatar Foundation to generate two huge investment camps in new green tech technology, in clean tech technology, which we are very excited about moving forwards with. I think the ambition was 10 unicorns by 2030, which sounds to me to be terrifying. But we're going to do it. It's the only, we've got to change the world somehow. So, my panellists, please, will you introduce yourselves, tell us a bit about what you are, your role in the clean tech space, and you know, why now is the time.
Okie dokie. Hi everyone, my name's David Pinder. I'm the exec chair of a company called Mixergy. So Mixergy is a company that's been spun out of Oxford University. I think it's about 4 years old. I've only been involved for the last 12 months. It has some really interesting core technology, which is very simple actually. It's about heating water from the top down rather than the bottom up, which seems pretty obvious. Don't know why nobody did it before, but it's very exciting because it saves a lot of energy. It means effectively you can heat exactly what you need within a hot water cylinder rather than heating the whole of the cylinder. So that leads to avoiding energy loss. You don't have standing losses, and of course you're only heating the proportion of water that you actually want to consume. But the tank is also a bit more exciting than that because it's smart. So it's a connected tank, which means that it can offer frequency response services to the grid, which will help as the grid starts to get overloaded, as we all buy our electric cars. But also it helps with things like load shifting. So it allows the tank to be heated at night instead of during the day, so it can work with agile tariffs. Like, there aren't many at the moment, unfortunately, we need more, but the tariffs serve people like Octopus so that you can actually heat your hot water when it's cheapest to do so. That also helps with load shifting when we have the probable issues around renewables not being as constant as we would like them to be. So when the wind blows, we can heat the water at night. In terms of my own background, I come from the dark side. I'm from backseat heating originally. So they're of course a natural gas boiler manufacturer who latterly of course have started opening up their own business in terms of developing technology around heat pumps and hydrogen boilers. So I was CEO of backseat heating for the last 8 years, and prior to that, even darker, I was in energy-intensive industries where I was at Pilkington, melting sand for 25 years. So hopefully someone else can help with that problem. So that's me, new to clean tech, really excited by it. I think we've got lots of tailwinds in our favour. Oh, I'm also chair of the Green Construction Board, so I work with government helping them with policy around greening the environment.
Thank you. Thanks, David. It is absolutely tell us a little bit about yourself and how the business that you have set up is playing in this space.
Yeah, sure. So my name is Gediz Karaca, and I'm the founder and I'm one of the co-founders and CEO of Otka Renewable Energy Technologies. Otka is an engineering spin-out from University of Oxford, specifically from Oxford Thermal Fluids Institute. And what we do is we transfer jet engine knowledge base into solar thermal industry. So basically we build a machinery which receives sunlight and produces hot air. This hot air can be used in processes, and 1/5 of all energy that we produce today goes into industry processes in the form of heat. So we think this is a significant portion of the unaddressed market in decarbonization. And yeah, I'm very happy to be here. And why it is important to right now? Why it's important? I think for the most important reason is people want it. People want to decarbonize. Otherwise, we can continue digging more oil and burning it. But people don't want to invest in oil and gas anymore. Because of that, we have this supply crunch we are experiencing today, and everyone wants to invest in clean tech. So we can invest in clean tech, we can develop technologies, and we can decarbonize the supply chain. I think that's why it's a good time now.
Thank you, both of you. Okay, so I'm going to start maybe with a slightly unfair but possibly killer question, right? So given that we had a clean tech investing boom about 10 years ago, and a significant amount of capital was put into a number of these technologies, which did not, frankly, deliver the kinds of returns that investors were looking for. What's different about now? Why is now a better time to be thinking about placing investments in these technologies? Gediz, what do you think?
Yeah, so from 2006 and to 2011, around $25 billion are invested in clean tech companies, around 130 companies, and the investors lost half of the money. So basically, they lost their shirt and they hated it. I think the main reason is they wanted to have clean tech companies behave like software companies, because they were used to have shorter timelines. But if you like to have a clean tech company, you should be okay with waiting 10 years, let's say. You shouldn't hope that, okay, in 5 years' time I will exit. And there's a recent trend happening today. Last week, Sequoia announced that they are restructuring their fund to be an evergreen fund. One of our main investors, Oxford Sciences Enterprises, they did it 7 years ago. They structured the fund as evergreen because this is the way you can have money required to make a company successful. And also the second part is more about the customers. At that time, the customers are not willing to implement the new technologies. But currently, in my company, I'm seeing lots of large corporations willing to take the risk and invest money, change their processes, and I think that's another important factor why it should be more successful right now.
Thank you. And David, just kind of calling into that point that Gediz just made there, you're the chairman of an organisation focused on technology which is about transforming domestic heating. Yep. and lowering, therefore, the carbon emissions associated with that. There's clear appeal in the consumer mindset. You only have to think, you have to see how much information is going out in the media, you only have to think about COP26. But sitting between you and the consumer are a bunch of fairly traditional providers, utility providers, power service providers, are they also on board? Are they part of the solution now, or are they still presenting challenges when you think about the refreshing of that whole estate of boilers that's going to have to be achieved for your technology to have its full impact?
I think we're at a key moment. It's a pivotal moment right now. I think the answer to that question only maybe 2 years ago would have been, no, it's still a real challenge, and there's a lack of engagement. But you can see now that things are starting to change and to start to move pretty quickly. So whether that's government-led, by government in its role as a client, or government-led in its role as a regulator, or through the grants and subsidies that it's offering, the supply chain is starting now to be stimulated, and certainly it's beginning to capture the imagination of the end user. There is still, I agree, a long way to go in terms of the bit that sits in between, and that is the installer. So in a lot of clean tech, you need arms and legs to put our products into homes and into commercial buildings. And there's a huge training issue there. So that's part of the challenge that we face. So we need to train a huge number of, for example, heat pump installers, if we stay on the subject of decarbonisation of heat. And that will take time. So an average heat pump installer will take sort of 4 years to be trained. You can convert a gas-safe engineer maybe in a few weeks, but if you're starting from the beginning, then it's a long process. And installing a heat pump takes twice as many men, twice as long as a boiler. So that gives you some idea of the scale of the skills gap that we face. Personally, I think the skills challenge is the biggest one.
Interesting. And it is your marketplace is industrial customers, so you're talking about heat generated on a massive scale for some of those processes, smelting, forging, etc., etc. How ready is the customer base to adopt your technology, and how much of a hurdle is that to you actually being able to have that technology demonstrate its ability to impact on carbon emissions?
Yeah. The honest answer is they are not ready. No one is ready. We are not ready, but we have to make it in time. And that's the theme of the conversation all the time. We have to make something. We don't know which solution is the right solution, which way is the right way. Would it be cheaper this way or that way? No one knows, and this is part of the problem. The fossil fuels are extremely cheap. Not right now, but in general it is very cheap. You just dig it and then burn it. So competing with that is quite challenging. Therefore, we decided to go for very basic applications, and this is how we are approaching to this problem. What is the minimum viable product that we can get? What is the easiest thing that we can do? What is the smallest scale that we can aim for? Because the ticket size is the biggest issue. If you would like to have a steel mill, that requires $2 billion investment. If you like to have a rotary dryer, it costs $1 million. So it is much easier bet to bet in $1 million development versus a $2 billion development. So I think the industry is not ready, but they are ready to take the risk. And we will be giving the industry the opportunity to take the risk with small ticket sizes. So I think this is the way how PV panels won the competition 10 years ago. And wind farms became the successful incumbents in the industry. They made their technology scalable, and people were willing to invest in smaller ticket sizes and commercialize the technology.
So we've got a description here of a market where we've got these new green technologies, particularly in this heating space where we're talking about domestic heating or industrial heat generation, which is where a paradigm shift is effectively required, right? Where you've got big industrial customers or organizations that sit between you and the end customers who need to wean themselves off traditional power sources, traditional fuel sources, and that is actually a big headache. They can't necessarily yet evaluate what choices are right. They can't necessarily evaluate what risk they're taking. And you're asking them to completely, in some instances, swap out over time a legacy estate. Sounds to me that this has to be a space where governments, state-led policy, needs to play a role. So what should that role be? We're talking here in the middle of the first week of COP26. What is the job of governments in this role in setting policy agendas that help support you as innovators leading clean tech businesses and help support investors in clean tech businesses to place good bets for investment? David?
The answer I always give to this is a clear line of sight. So as long as industry knows the direction of travel, preferably the pace of that travel, then it's always possible to invest in a more certain future. So if government's really clear about what the future as they envisage it looks like, then it's easy to convince boards to invest. If you have real uncertainty, particularly if government frameworks only last for the term of a parliament, that's really difficult for boards to cope with. So you really need cross-government agreement about the direction of travel, and you need more certainty that can be brought through regulation. Sometimes through subsidy, but subsidy tends to lead to a false market that maybe helps with a bit of supply chain pump priming, but in the end can be quite risky, because particularly if you're investing in fixed assets, those assets may need to be unwound at the end of the subsidy period, so that can be a little bit unhelpful. And I think industry is quite wary of subsidy-driven markets anyway. I think too many companies have had their fingers burnt. So I think what's really important is a clear line of sight.
Do you feel that that should be a line of sight that's backed by regulation?
I think in the end it has to be. It has to be because we've got a legal obligation to deliver our carbon budgets, and I don't think we're going to move quickly enough if we don't. And I also think there are, without being rude, there are certain parts of certainly the construction sector whose main objective is the lowest cost of compliance with building regulations. I think we all know I'm talking about the house builders. So unless you ratchet up the level at which they're complying, and that involves decarbonisation, then it's unlikely that house builders, there are a few, please, I'm not denigrating the whole sector, there are some that are more progressive, but for the volume manufacturers or builders of houses, lowest cost of compliance has been their mantra from the beginning, and that has to change. So you've heard about the Future Home Standard. I think that's a really positive step. It doesn't go far enough, but it's a positive step in the right direction. And one thing that government does tend to do, although it's moved away from that a little of late, is be technology agnostic. So normally the requirement is a level of energy efficiency rather than a particular technology. But they have been very clear about heat pumps, and that's unusual for government to be technology specific. But if I have time, maybe I could come back to that. I could talk all day about heat pumps, but I don't want to dominate the...
I could do, you mentioned before, you talked about what we would, and I'm sure you would also refer to as patient capital. So this idea that investments in clean tech require a longer capital return cycle than traditional investments in software businesses or digital businesses, for example. How do you go about thinking about who is going to be a good patient investor? What are the questions that you are going to ask investors that are going to help you feel confident that they will have that different approach to their investment cycle management?
Yeah, my first question to an investor, actually I'm not going to ask this to an investor, but it will be back in my mind. Will they be flexible? Because I don't know what will happen 6 months from now or 1 year from now, and that requires flexibility, that requires commitment. I might require to raise some funds next year, and would they follow on their funding, or is this just a one-time investment? Would they be okay would they be introducing me to value add networks? Would they like to use our product if they are a corporate? Would they like to use our product in their product line? Would they like to block us when we would like to work with other corporations? So the flexibility is quite important, and being open and honest about this is crucial. As a small startup, we would like to be open and honest and transparent about everything. And I think the important bit is to maintain that transparency in the investor relationships.
Thank you, Kadiz. I'm going to ask if there are any questions from the floor. I have like about 700 more questions, so I don't necessarily need questions from the floor, but I want to make sure that anyone who has a question has the opportunity to ask it if they'd like to. But I don't see any hands up at the moment, so I will carry on with my list. Now, this is the one that in our practice session, I think David described as an evil question. Thank you very much, David. So I'm just going to put it out there. Really be honest with me, guys. Does actually clean tech technology just drive a higher consumption rate of the world's natural resources? You know, aren't you just on a bandwagon of another form of consumption of technology? Wouldn't your investors be better placed to look for less growth and not more growth, and to slow the kind of ever amplified cycle of consumption in the world down?
It is an evil question.
Yeah, I know. I did give you prior warning.
You did. Shall I?
Yeah.
Yeah, I mean, my view on it is that it's important that we don't accelerate the replacement cycle. So we've got to be aware of whole life carbon, not just carbon in use. Mm. We've got to be aware of the embodied carbon that we're introducing as a consequence of that consumption. And so, I mean, at a personal level, do I buy an electric car? I've got a perfectly good diesel car with all of its embodied carbon. And the answer, I think, is yes, I should, when I would normally replace my diesel car. I shouldn't rush to do it. I should do it in the normal way, in the normal cycle. And I think it's the same with my favourite subject, decarbonisation of heat. You know, we should be replacing boilers that need replacing. We shouldn't be putting in heat pumps to replace perfectly good boilers with all their embodied, I should say, carbon. So the whole life carbon is the real challenge that we must be mindful of whenever we introduce a new product or service.
I remember you talked before in our practice session a little bit about how some of your customers who are not yet ready to implement your technology are still interested in effectively using your technology in a secondary market way, right? So they're actually interested in you, in effect, helping them to offset their carbon produced from their existing smelting foundry, whatever it is that's generating enormous amounts of heat in their processes, and using your technology to produce greener thermal power that can be used as an offset. Is that part of the answer to this question?
Yeah, there are lots of possible answers to this question. The first answer that pops in my mind is, first of all, we don't have that money to change everything, even if we wanted today, and even if we change the depreciated bits, which is 5% every year, it would add up to trillions of investment in the world. So it is very ambitious even to change the depreciated bits of the industry. This is the first answer to the question. The second is more practical, which is coming from our industry engagements. Incumbents would like us to produce sustainable fuels rather than changing all of their infrastructure, because they have hundreds of plants, and instead of investing in infrastructure in every plant, they would like to burn something which is sustainable, which is not impossible. This can be done, but it will have a cost as well. So either you will decarbonize the fuel base, so make the fuel costlier, or you will decarbonize the process. One of them requires lots of capital expenditure, the other one requires higher fuel prices. So those are the two levers that one can push or pull.
Thank you for that, and given that we, I think, flew off our test aircraft on 100% sustainable aviation fuel earlier this week, or possibly late last week, that sounds like a message that's very familiar to my organisation too. We're coming up to the end of our session. Charlie, do you want us to finish on time? Yes. Just checking, because we started late.
We could carry on.
We could carry on. And I want to thank both of you. Thank you so much for your time and for talking to us about some of the opportunities and actually some of the structural, I'm going to say challenges, but surmountable challenges, but big asks that still exist for, I think, a really positive investment marketplace for clean tech. I'm minded that you've talked about that need for patient capital, that need for flexibility, that need for investors who understand that they're investing in a cycle of technology development which is not a pure play digital cycle of technology development, and therefore needs time to iterate through. And I'm also mindful of the fact that you rightly raised the challenge that to address incumbents who may not have incentives to move as fast as, frankly, we and the rest of the world need them to, we will need governments to take a role in both setting a clear agenda and then backing that agenda up with regulation. And I think those two things we see a lot of appetite for that, we see some of that coming through, so that feels really positive, and I can clearly see why now is a fabulous opportunity to invest in these technologies. But thank you for your time and your evidence to help us understand how that works. Thank you very much.
Thank you.